Okay. How I created a deal flow machine that helped buyers close $33 million in SMB deals. Now, first of all, one is I kind of talk fast. One of these presentations, and I go through this fast. So, A, you can always ask questions at the end. B, I will have a recording at a later date when I get around to recording it, uploading it, and sharing it. And C, some of the tech tools I share today are evolving more rapidly than can imagine. Like there are some tools that I was working on yesterday, and I saw a post today that it did something different and more. And some of these tech tools are overlapping. So you may need some, not all the others. So you don't need all of the deals. You just need more leads in your inbox. So having said that, some of the tools might work for you. Some of the tools might not work for you, but they are pretty cool. Here, all right, here we go. Welcome. So most buyers don't fail due to lack of money. They fail because they can't find real fundable deals. There's just not enough. And without deal flow, nothing else matters. If you showed up just a little bit earlier, I was playing Metallica, which was Nothing Else Matters kind of song. I'm not a huge Metallica fan, but that's the only thing that would fit with this. So I want to set your expectations. When you're going to look for an SMB out there, you are in a sales campaign. You are 100% commission. You eat what you kill. Is there anybody out there that has been in sales, was on 100% commission? Anybody out there? Just say yes in the comment section. I'm just kind of curious because I find these people are pre-programmed to understand that I got to talk to a lot of people. And if one person says no, you're on to the next one real quick and you don't get emotionally involved. All right. Yes. Yes, Rennie. Good job. All right. So, all right, let's go to the next slide. And it's a numbers game. As you know, if you've been in this, vocation right now and trying to find a business to buy, you got to look at numbers. You got to get your reps in and you just got to keep moving forward. Sometimes you can find a business on the second one. I do had a student that looked at 2 deals. On the second one was fantastic. A Windows blinds company, throwing off 570,000 in net income, proved in on the 1120. This was her second look at a sim. That rarely happens. More often than not, it's usually after 15th, 20th, or even 30th. So there's no time limit on one. What you'll find a good deal looks like. Somebody else commented. All right. Yes. Jim McBride. Yes. All right. Success in any sales, that you've got to have the right attitude, persistence, and process in place. Never fail, never quit. Don't get emotionally attached to any deals or failures that you have no control over. All right, the deal flow system SMB acquisition engine. All right, there's 3 core channels of deal flow going looking for an SMB. One is on market, and that's with public listings, Biz Buy Sell. Biz Buy Sell gets like 2 million visitors per month, and other broker sites like local brokers. A lot of these local brokers you'll find in your town. Let's say I'm Tucson. I can go to ChatGPT and go, hey, give me a list of the top business brokers in Tucson. And that'll give their names and their email addresses and their phone numbers. You can do that. Off market. Oh, by the way, some of these local brokers don't list local businesses for sale if they've been in the industry on Biz Buy Sell because they don't need somebody from New York or California going, hey, I want to buy a business in Tucson, Arizona. It's just unlikely they're going to move that quick. So sometimes they just filter out of the area kind of inquiries. Off market, direct outreach to owners. And then there are some characteristics of that, but I'll get into that later. And centers of influence. I call this the 3rd channel. These are trusted advisors already in your seller circle, and they have influence over possibly business. So let's talk about channel one, which is on market first. And this is what I've been doing some work on. And there's a couple tools out there right now. There's some scrape broker sites that have already created little apps for like Biz by Sell, Flippa, and other broker sites, Browse AI and Appify. And I found out who developed both of those. They're both on LinkedIn. They're Eastern European programmers. You can use no-code tools like Appify, Biz by Sell Scraper, like I said. You can pull the business name, location, asking price, STE, and revenue and EBITDA. Now, let me just go back. Browse AI and Appify may charge for those for uses per month. I think Appify's got a Biz by Sell Scraper. It's like $35 a month. So just be aware that there are some charges to that. These guys don't program and code stuff and solve a problem without wanting to get paid for it. But they will include description, URL, broker name, phone number. And with these scraping tools, you can export right to Google Sheets and Airtable. Has anybody used Airtable? It's pretty cool. Many scrapers are already built, Eastern Europe developers. Then you can layer AI to this to score those listings. Like you can layer to ChatGPT and go, hey, this is 1 out of 10. You can highlight red flags. What you see it sometimes like red flag is they don't have the SDE or net income on the website. So that's always a red flag to me if they don't have that. Because if they did have a good SDE or EBITDA, you want to brag about that. You can prioritize the outreach. Very soon, you will be able to go to ChatGPT or to Claude or to Gemini and say, let me know about the top. You don't need a CRM system. Just go, hey, send me the top 10 people I should reach out to today about good deals. And it'll do that for you. Here's some on-market strategy tips. Look, everybody that starts in this game gets on market. And I recommend on market because of three conditions that are met. One, it's a motivated seller. They signed some paperwork with the broker to sell their business. Two, it's got a valuation or it's a starting price for you. If it's a hot market, they're probably going to get asking or higher. If you get into it, the deals go, the cash flow is not there, it's lower. So it is a starting price. And number three, the broker did a lot of work for you to get the financials together. Usually they're going to put a SIM together. You're going to have financial report cards. That is the income statements, 3 to 5 years, balance sheets, at least 2 of them, or cash flow statements. And anything else like tax returns, 1120s, should have that ready to go for you. That's why I recommend to everybody to start with on market. Now, everybody starts this, goes, I'm going to start hot and heavy, and then it trails off because brokers don't work for you. They are only looking for businesses that are motivated to sell. One week, it could be a gas station. Next week, it's a restaurant. Next week, it's a HVAC company. Unless you go to brokers that sell very specific niches like accounting or one of the interviews I did sells HVAC companies. So it does trail off, and I will talk to you about that in a minute. They don't work for you. They list what they're given. So you have to supplement those off-market, those on-market deals with off-market and centers of influence, the other two channels. By the way, deals do come back around, so stay in the game. And what I mean stay in the game is if you find a good deal and you're doubting about it, the broker usually says, hey, we got a lot of interest in this business. You got a couple LOIs. I don't know if that's true or not, but if you like the deal, put an LOI on it. And if you don't get the deal, the first LOI that was accepted may fall out and you're first on their list because you put an LOI in. If you didn't, why would they come back to you? And the true story about this is me and my partner are looking at a medical billing company in Texas. We put an LOI on a $1 million EBITDA medical billing company. We lost out to a larger company that already had medical billing and they were doing a roll up, and they had what they did. And the reason they lost is they had a really complex earnout system. and the sellers just couldn't figure out how much they're going to make, how much they're going to lose, what was the impact, what was the risk, and they just said, forget it. We're not accepting that LOI anymore. And they called us. We were the next on the list, and they called us. So get those LOIs in, stay in the game. All right, so this is a kind of a flow of what on-market deal flow could do for you. I'm using Claude, but Gemini can do this, and there's some other, other apps out there can do this too. So Claude prompts Appify to run the biz buy sell scraper. You pay a little bit of money for this. It's already got all the characteristics you're looking for: business name, asking price, revenue, location, description, URL, code. Goes to Appify, goes through Claude and GPT, layers the process. You can score it. You can look for red flags like low margins, declining revenue, owner dependence, or debt service coverage ratio. This is the one thing I focus on with every student I have is debt service coverage ratio, because most people are trying to buy the business. SBA payment calcs, and then I'll put a clean summary. Think of this as kind of your own sim, what you need to make a deal like. Because if you want to run this by somebody or take it to a pass or pursue group, you go, you're ready to talk about this. I like the deal. Where's the red flags? And then 3, all data flows to Airtable or Google Sheets. You can assign ranking and start contacting them if you needed to. Now, most of the time, you don't do any outreach with on-market deal flow because it just goes through the broker. So you just need to have the broker ready to go. But filling out the SIM or maybe filling out the NDA, you can get help with ChatGPT, or filling out personal financial statements. All of that can be done through help with ChatGPT. Let's go into off-market. Now, off-market, if you're not finding enough with on-market, you got to supplement with off-market. So here's where we want to build a targeted list using Data Axle. Now, I put a video out recently about Data Axle. You can get a free access to Data Axle if you get a membership card to your public library. I got a video on that. That's in my book, how to do that. Apollo AI, IO, Yelp, and Google Maps. Now, remember, Google Maps are great for offline service-based business. They want to get found. In turn, or in opposite, I did some work for a private equity firm. They were trying to locate, they wanted to purchase e-commerce companies. E-commerce companies just don't want to get found. Like, you can use the Nix, not the Nix system, but whois.com, find out their email online or built with or something like that. They just don't answer it. But offline businesses using Google Maps or using Yelp want to get found. So they have all the information there. And when you do an analysis of a business that you scrape from Yelp, they're like, it will have 1-star review or 3-star reviews. And just yesterday, I had a Pass or Pursue group meeting, and Rick, one of the guests here, talked about one of the businesses he's looking to buy, had some really tough reviews on it. I don't know, 2 out of 3 out of 5, because the guy was dishonest. So that would tell you on Yelp. You can also use LinkedIn Sales Navigator and NIC code. I will just warn you about LinkedIn Sales Navigator. Now, any scraping tool used on LinkedIn is a violation of their user policy. So be very careful if you kind of use scrapers on LinkedIn Sales Navigator. Now, you can use LinkedIn Sales Navigator. They are great for online businesses because they want to get it found online. They will be listed. I used to see like ad agencies. You could just find thousands and thousands of ad agencies. The challenge with LinkedIn Sales Navigator is you can only do about 200 outreaches per week at most. So, but if you keep that going and build momentum, it starts compounding. Some of the deals will come back. Some of the conversations come back. You can do a lot of connecting. You scrape that contact list with Clay or PhantomBuster. These are in the tech tools they talked to you about a little bit, but they optimize the kind of information you're taking. Use AI to filter, and you can look for seller signals like 25 years, right? You want somebody that has some kind of signal that their propensity is to sell, like family owned or owner retiring. They may say that on Yelp or or a comment on Yelp and they said, well, we had a great deal, but the owner told us we're retiring, right? You're looking for some kind of seller signals. Google reviews, team pages, no hiring activities. Sometimes you can get this from Google, like not Google, but LinkedIn. You can see how many people are on there or using LinkedIn. Sometimes that's a true representation. Sometimes it's not. Sometimes your employees don't engage on LinkedIn. But you can look for those signals and at least have that characteristic to look for. Headcount drops off or unchanged org chart for a long time. You're looking for motivated sellers. So then you use some tools like ChatGPT and Clay and Apollo to, send personalized intros, auto generate follow-ups, track replies to Lemlist or Instantly. There are a lot of competitors like Lemlist and Instantly out there finding emails and getting the right email. So you can do ChatGPT and goes, hey, I need some competitors in Lemlist or Instantly. They're out there. All right, so here's kind of a flow of off-market deal flow. You want to build a targeted list. You're going to get that from Data Axle, let's say, or your public library. You can go to Apollo AI, and I will tell you, Apollo AI is adding features onto its data set all the time. It seems like every day they're adding stuff. It's a lot easier to code with no code tools like Replit and other things. Google Maps and Yelp. By the way, I also had ChatGPT create this image, and I just noticed one little spelling error. Build a filtered AI, analyzes the copy, personalized outreach. This is kind of what it looks like. So, and you can create emails like, what's the best ways, cold outreach to HVA firms in Raleigh, North Carolina. And I will tell you this, there's other ways to do this, like reaching out. Email works because they want to get found, but a lot of these guys like HVAC are getting a lot of requests from, maybe 1 or 2 emails per week 2 to 3 years ago to 4 to 5 per week today. Some businesses are just in a seller's market right now. Now, if you're going to do off mail marketing, meaning like a direct mail piece, you could either do this yourself or you could send it to some local mailing company in your area. You just have to get them the list and they'll do the mailing. And you say, hey, I want to send 5,000 pieces this date, this date, this date. Because I tell you, people just don't respond to the first email. They'll have to you'll have to send mail call, or mail email call, repeated tasks to find somebody. It's a numbers game. I had one guy, I guess, on my show, Matt Bodnar. He just raised some money through Mainshares, bought 2 companies, and he sent out 5,000 mailings at a time and gets about a 2% or less response. So he talked to 17 people and got about 4 or 5 LOIs and 2 deals from that. So it is a numbers game when you're doing off market. I just want to set your expectations for that. So here's an off market tech stack. To get the names, you got to go to Data Axe or Apollo. To enrich that data, you got to go to Clay or PhantomBuster. If you want to personalize it, you got to go ChatGPT to Claude. And you want to do outreach, you go to Lemlist or Instantly. And there's some other automation tools like Zapier. Zapier connects one app to another app. So it basically talks to your, it's a great communicator. And pipeline management, Airspot, Airtable, HubSpot, or Google Sheets. So that's pipeline management and using the deal. So this is the off-market tech stack. You may not need all of it. You may just use 1 or 2 of it. And sometimes of these are overlapping because they're adding on features just constantly on each one of these deals. So you may not need, I need 3, subscriptions to 3 or 4 things. Just get one, try to get your flow in, and then maybe add it later if you're not getting enough flow. Off-market characteristics. Off-market is a numbers game. It is a sales game. You need the numbers. Like I said with Matt Bodnar, he did 5,000 mailings and got 17 responses. That is a very, very low response rate. So you have to mail call, or mail email call. With off market, which is the opposite of on market, sellers are not motivated. You're just catching them out of the blue and going, hey, are you interested in selling your business? No, I just got married, right? Or no, things are going great. I'm making money. I love what I'm doing. No indication they have. Or you may go, hey, are you interested in selling your business? And they go, sure. What are you offering? And this is an ego type of response because they just want a big number and see what it is. But they're not going to do anything. They're not going to sell to you. There's no valuation. And if they've never talked about selling before, they've just been heads down working on the business, they're going to think their $1 million business or 1 million top line business is worth $10 million. So that is the time between they get a realization what their valuation is and the time that they want to sell could be a big get back. A big gap. Could be 3 months, could be 6 months, could be 2 years. We don't know. Also, you're not going to get any docs from them until the trust is built. These folks are running their business, they're getting their books done, they're paying their taxes, and they've never had somebody ask them, please send me 3 years of financials. Please send me your tax returns. That would take a lot of trust. So they're not there yet. And to get that done to the time you actually see it could be 3 months, could be 6 months, could be 2 years. Just set your expectations for off-market characteristics. But you are building a system. And if you're working for a private equity fund, you're going to keep doing this because they've got, they got to keep their deal flow going. They look at a lot of deals. They eliminate a lot of deals, and they only accept a few. If you think like a private equity firm and you build your system, you're not just going, hey, spray and pray kind of stuff. You're looking for a system where it works, and I get deal flow, and it's not sparse. All right. Channel 3, centers of influence. A lot of people don't do this, not aware of it. I like to keep it in, but I do want to remind everybody that this takes patience, time and patience. And who are they? They're like trusted advisors. They're attorneys, they're CPAs, they're wealth managers, they're doctors, they're pastists, your next door neighbors, mastermind groups, they're industry orgs. But I want to say this, don't expect referrals until you've given value first, until you put value into their bucket. You have filled their bucket. I mean, just think of it like, I'm going to reach out to an attorney or an accountant and go, hey, do you know any businesses for sale? They're just going to go click. No, that's not how that works. You're going to be on the country club, playing golf with them for a long time, and just go, hey, what are you up to? What are you up to? Or, hey, look, I'm looking for a business to buy. Great. I know what's his name's retiring. This is after 2 to 3 years of, knowing each other and filling each other's buckets. Because it's reciprocity driven, right? The only way you're going to do this is stay top of mind, show up, be helpful. Don't ask too early. Don't start out asking. Fill their bucket, ask. And don't expect quick returns on this. It's like you can't take apple seeds, go out in the backyard, and it's fertile ground, plant them, water them one day, and then, go to bed, sleep, wake up the next morning expecting apples to eat. It just doesn't work that way. It takes time. But you can, if you're doing this, you can supplement your on market with off market and centers of influence. Also, go to LinkedIn too. I'm looking for a business to buy. Just let me know. There's a lot of groups in there. You can post in there. You can post on Facebook. Do it all online, social media. AI tools that multiply your you. All right. Deal scoring. GTP filters ranks based on your target criteria, learns what you passed or like. It starts, I don't know if you've ever had conversations with ChatGPTs, it kind of starts feeling your characteristics and how you talk. Automated outreach, it could do auto writes and intros. You could fill out the NDAs, send buyer profiles, follows up automatically. SIM summarization and risk. This is kind of what I do with my pass or pursue group. I said, hey, let's take a look at the SIM. Let's take at the financials. You can upload that PDF. You can get revenue, SDE, price, employees. We can look for red flags, weak margins, declining revenue, or valuation. What should this business be worth? If it's only throwing off $150,000, the guy's asking $1 million, but it's only throwing off $150,000 per year. Like, that's crap, right? It's only going to be, if I'm going to have a 2 debt service coverage ratio, I need to know what it's really worth. Yeah, it's probably worth $500,000. Payment count, example, $1.5 million, $300 down, 13 months. We want to know that and have those expectations set. Like, I want to see that, because once you buy a business and get that, you may see a downturn. More likely than not, you could see that downturn, and that really hurt you. Somebody might leave, employees might leave, somebody else retires, customers don't like you and don't want to do business with you again. All the things that happen, make sure that there's a margin of safety on that debt service coverage ratio. So everybody knows who Seth Godin is. He's got a book out called The Dip.
We needed to do both things. We needed to guide.
Somebody is talking, and I have got to put them on mute. I don't know who that is. All right. Back on, everybody. So Seth Godin has this book called The Dip. He talks about, is it the dip or is it a cul-de-sac? You go on market, it starts out fun. Lots of leads, but then the leads start drying up. It gets hard. Not a lot of leads. You have to know if this is a dip worth pushing through, or is it a cul-de-sac, not dead end, not worth pursuing. We looked at a lot. I had a student looked at the Anytime Fitness franchises, and it looks great on the sim, but every single time we got the financials, they were not making money. We said, like, that's a cul-de-sac, that's a dead end. Let's stop going that direction. We like the business model, but like, how do you pay for all those machines, like $2,000 to $3,000, and have people, maybe contractors or full-time employees, and keep people going in 24 hours? The numbers weren't there. So for us, that was a cul-de-sac and dead end. The winners recognize the difference. They go through a dip. If there's no more on-market deal flow coming in because your broker is working on trying to close an HVAC company and you're trying to buy e-commerce, you need to supplement with off-market deal flow, or go into trade shows, or go into e-commerce conference, or join e-commerce groups and asking anybody in that centers of influence. Those are the people that move through the dip and win the best deals. All right, so here's a couple real success stories. He looked for 2 years. He joined my program, learned how to vet deals quickly. Deal number 14 we looked at was a $2.5 million security company, owner retiring, strong cash flow, SBA qualified and funded. And then there was Sam. We found an e-commerce book with messy books, realized the seller ran personal expenses through P&L, cleaned it up, showed real crazy SDE. You know what we did? We anonymized the bank statements. We asked for 12 of those. Here's the real story. The SIM said one number. The QuickBooks file said one number. The 1120 tax return said another number. And then we said, you know what? The only thing that's going to tell the truth is the bank statements. We asked for 12 months of bank statements. We anonymized those. We uploaded it to ChatGPT and said, separate the business expenses from the personal expenses. Well, lo and behold, that business was throwing off over $500,000 per year, $200,000 more than the SIM said in SDE, $400,000 more than the 1120 tax return said. So we put an offer on it real quick. However, other people actually sold the same thing, and they put offers on it too. But we're waiting for that one to come back around because it hasn't closed. Got offers from banks after numbers were clarified. So your next step, and remember, I said this is not going to be very long. I talk fast. Just if you haven't already, you can go to dealflowsystem.net, ebook, $4.95. Get that. It's got the SMB acquisition engine, and I talk about everything there. I talk about deal flow. I talk about deal review. and deal financing, raising the capital to purchase it if you're short on it. Or, get the self-paced course at 197 or join my SMB acquisition community. That's the Pass or Pursue, weekly live calls, support, capital connections, service provider connections. I've got them all. I've got some of the best attorneys out there. I guess the best light due diligence, affordable CPAs, not the 15, 30,000, 40,000 ones. I'm talking about the $5,000 to $6,000 ones. And the attorneys the right asset purchase agreements and back you up, reps and warranty insurance, and capital connections. I'm an advisor for SME Investor Network. If you're trying to buy a $5 million business, you need $500,000 down for that 10%. You only got $100,000. We got to raise the rest. We can help you raise up $400,000. So that's your next step. And that is, I know, a very quick, because I talk fast, that is totally available now. There are ways to do this to find community. Just get a list from Apollo or Reference USA or Data Axle and start using that list to outreach to people, or scrape Yelp, Google Maps, with Appify, or that other tool I mentioned, and just start doing that for supplementing your on-market deal flow. All right, or on and off-market deal flow. All right, I'm gonna stop share and kind of open it for questions if you had any. Yeah, that was 30 minutes, so that's what I expected to take long. So I'm gonna stop recording.